Here's the uncomfortable truth nobody tells you up front. Every time you buy something online, fill your petrol tank, or open a banking app somewhere in the background, the stock market is moving money around without asking your permission. And whether you understand it or not, it already affects your job, your savings, and your future. So the real question is, what is the stock market? It's why were you never taught how it actually works? Stay with me, because by the end of this video, the stock market will stop feeling like a casino and start looking like a machine, one you can either ignore or learn to use. And before we go further, quick check. When you hear stock market, what's the first thing that comes to your mind? Risk, rich people, or scams? Drop it in the comments, I'm genuinely curious. Now let's rewind. For most beginners, the stock market feels intimidating for one simple reason. It's talked about in headlines, not in human language. Markets rally. Stocks plunge. Investors panic. But nobody explains what's actually happening. So let's strip it down. At its core, the stock market is just a place where ownership is bought and sold. Not products. Not money tricks. Ownership. Imagine a simple business, a coffee shop in London. The owner wants to expand, new machines, better location, more staff. That costs money. Instead of taking a loan, the owner decides to sell small pieces of the business to the public. Each piece is called a share. If you buy one share, you own a tiny slice of that coffee shop. If the business grows, your slice becomes more valuable. If it struggles, your slice shrinks. That's it, that's the foundation. No flashing screens. No shouting traders. No secret codes. Just businesses and ownership. Now here where it gets interesting. Once those shares are sold, people start trading them with each other. I'll sell mine. I'll buy yours. Prices move based on what people believe the business will be worth in the future. Not today. Not yesterday. The future. And this is where psychology enters the room. Because the stock market isn't a scoreboard of facts. It's a voting machine powered by expectations, fear, optimism, and sometimes pure nonsense. Let me give you a simple example. If a company earns £1 million this year, but investors believe it will earn £10 million in 5 years, the stock can rise today, even before that money exists. On the flip side, a profitable company can see its stock fall if people lose confidence. So prices don't move because numbers change. They move because stories change. That's why headlines matter. That's why rumors move billions. And that's why beginners get confused. Quick question, do you think stock prices reflect reality or expectations? Tell me what you think in the comments. Now let's talk about how you actually make money here. There are two main ways. The first is boring. The second is exciting and dangerous. The boring way is called long-term investing. You buy shares in strong companies. You hold them for years. As the business grows, your ownership grows in value. Some companies also pay you a portion of their profits called dividends. It's slow. It's quiet. It's not flashy. But historically, this is how most real wealth in the stock market has been built. The exciting way is trading. Buying today. Selling tomorrow. Trying to predict short-term price movements. This is what social media loves to show you. Screenshots of profits. Fast wins. I turned $500 into $5,000. What they don't show you. The losses. The stress. The accounts that quietly disappear. Because here's the uncomfortable math. For every trader who wins in the short term, someone else is losing. And over time, transaction costs, bad timing, and emotional decisions eat most beginners alive. This doesn't mean trading is impossible. It means it's not beginner-friendly, no matter how confident someone sounds online. So if you're new, the real question is, how fast can I make money? It's how do I avoid losing it? Which brings us to risk. Is the stock market safe for beginners? Honest answer. It depends on how you enter. The market itself isn't dangerous. Ignorance is. Most beginners lose money not because the market crashes, but because they panic, chase hype, or invest money they can't afford to lose. Let me paint a familiar scene. You hear about a stock everywhere. Your friend mentions it. It's trending on Twitter. You buy at the top because you don't want to miss out. Then the price drops. You panic. You sell at a loss. Congratulations, you just donated money to someone more patient than you. This isn't bad luck. This is human psychology. The stock market rewards patience and punishes emotion. And it does it quietly. Now zoom out. Why does this matter right now? Because traditional savings accounts aren't doing what they used to. Inflation quietly erodes cash. Wages struggle to keep up. And more responsibility for retirement is being pushed onto individuals. In the US and UK especially, the stock market isn't optional anymore. It's baked into pensions, index funds, retirement plans. Whether you invest directly or not, you're already exposed. The real risk is staying completely out and letting your money lose value in silence. Pause for a second. If you had invested £100 a month into the market 20 years ago, you wouldn't feel rich overnight. But you'd feel something even better today. Control. Now let's talk about how beginners should actually start. Not hot stocks. Not predictions. Not tips. Structure. Beginners don't need to beat the market. They need to survive it. That means diversification, owning small pieces of many companies instead of betting on one. That means long-time horizons, years, not weeks. That means understanding that drops are normal, not disasters. Markets fall. They recover. They fall again. That's not a flaw. That's the system breathing. If that idea makes you uncomfortable, good. It means you're taking it seriously. Because the stock market isn't a get-rich-quick scheme. It's a delayed gratification machine. And most people quit before it pays them back. Let me ask you something important. Would you rather be right quickly or wealthy slowly? Drop your answer below. Now here's the irony nobody talks about. The stock market looks complicated on purpose. Because complexity scares people away. And when people stay away, opportunity concentrates. The biggest edge beginners have isn't secret knowledge. It's time. Time to let compounding work. Time to ignore noise. Time to learn instead of rush. You don't need to predict crashes. You don't need to find the next big thing. You just need to not sabotage yourself. So the next time someone says the stock market is gambling, ask them one thing. Compared to what? Because doing nothing with your money is still a decision. And it has consequences. We've covered what the stock market is, how it works, how people make and lose money, and why beginners don't fail because they're stupid, but because they're impatient. The question now isn't can you invest? Will you take the time to understand the machine before stepping inside it? And here's the thought I'll leave you with. If the stock market is just ownership of businesses, and businesses shape the world around you, what does it mean to never own a piece of that future? Tell me your thoughts in the comments. If you found this useful, you know what to do. And if you want to go deeper, how to actually start investing step by step, stick around. This is where things get interesting.